Well, let's take a trip to our London studio where Juliana Olayinka is standing by to tell us what's happening in the UK. Good afternoon, Juliana. Well, let's begin our conversation with the inflation numbers. Now, of course, despite the lockdown, the inflation fell to 1.5% from 1.7%, and economists warn that inflation could even drop to as low as 0.5% in 2020. Tell us what's responsible for the decline.
Well, Bissy, in short, I think what's the main response to this inflation, 0.2% drop in inflation in March, is fuel prices. Fuel prices in retail, they seem to be dragging inflation down even before, well, weeks before the historic market drop on Monday. We had already seen that oil prices were in trouble. Typically, especially here in Britain, oil price doesn't typically affect how your prices will be at the petrol tank, but because they were dropping so rapidly, it did affect them. And hence, in February and March, about 5p was taken off per litre at the pumps, as this has affected inflation. Also, as well, retail, their prices dropped by 1.2% in March, and this was even before Boris Johnson, the Prime Minister, called for a lockdown. We know that high street retailers have really been suffering, and to try and combat the fact that people are not coming in their stores, they are slashing prices rapidly. They've slashed even further since the March the 23rd lockdown. So it is retail and petrol that seems to be really dragging down inflation. Yes, some analysts have said after the release of this data that they expect inflation to fall as low as 0.5% in the coming months. And again, that's because of the lockdown and because, you know, a lot of these retailers and these service industries will be so desperate to get people in their stores again that they will be chopping their prices at a very low rate just to try and get the economy kicking. Just bearing in mind that the Bank of England sets the inflation rate at 2%. And of course, this data today shows that we're well below that.
Now, tell us how the markets are reacting to the inflation numbers.
Well, as soon as the inflation numbers were released at about 9:30 this morning, the pound did get a slight lift. It didn't really affect the all share. The all share opened at early trading on the up. It's still up at intraday, and I suspect that this has got a lot to do with the fact that Britain is going to be one of the first nations in the world to start trialing a COVID-19 vaccine on human beings, and that will start tomorrow. So the market, of course, are really excited about that. At intraday, the all share is up by 1.17%. The FTSE 100 up by 1.34%, and the FTSE 250 is up by just over 0.5%. In currencies, the pound also up on the US dollar by just over 0.5%, up on the euro by 0.36%, and up on the Japanese yen by 0.38%.
Now, the new governor of the Bank of England has warned against lifting the UK's COVID-19 restrictions too early. But does he have good reason to support this?
Well, he does. He's a Bank of England governor, one of the most important financial brains, not just in Europe, across the world. And these comments come really at a time where in the UK there's a huge debate on at the moment about when these lockdown measures are going to be lifted. Of course, we know Prime Minister Boris Johnson, he's still off sick, as they would say. And some have said because of his own reaction to the coronavirus, having experienced the pain and what it could actually do, which is, of course, kill you, he is concerned about letting people out too early because he doesn't want a second spike. And this is what Andrew Bailey echoed in an interview he had with the Daily Mail yesterday night. And of course, him more than anybody wants to see the economy back to its glory days. But he is concerned that if we are too careful about opening businesses, opening the transport network, asking people to go back out to work, that there could indeed be this second spike. And he says if that happens, then of course the economy will be in a much worse state. And I think most importantly for economists and for the Bank of England, it's that consumer confidence. Again, the services industry in Britain is worth 80% of GDP. If the doors are open too soon and people are asked to go back into their homes, people may never use these services again. So that's the fear. And I think it's a really important important point, and it's very timely coming from the Bank of England as Britain, you know, is just coming out of its 5th week of the lockdown, Bissy.
Absolutely, Juliana. Thanks for those updates. We'll see you again tomorrow.